Hello, it's John Piper with the weekend video on Saturday the 10th of February. Before we look at this chart, which is of the Dow, I want to say a few words about Bart's crypto management service. As you know, I put some money in December, so I had 2 months results now. Bart was up about 40% in December, which was an excellent result obviously, and up I think about 6% in January. Now again, being up in January is a fairly incredible result, and I think it's more impressive than the very high return in December. So what I do with the service is I do stuff that I believe in, and I mention it to you so you can think about whether it's something that might suit you. I don't know whether it will suit you or not. I have no idea. I know nothing about clients' personal circumstances as a general rule. So we take the crypto management, for example, quite a high minimum. It's $50,000, but very high returns. Bart takes a pretty substantial fee. But also there's a psychology. The cryptos are a young market, lots of potential gains, but it has slid. The actual huge fall in the last few weeks. It's gone down from 20,000 down below 6,000. So that's I think about 70% decline, or 68%. It was certainly a very substantial decline. This is not for the faint-hearted. Okay, Bart managed to turn that into a profit. I'm not sure I managed to do that, but he did, and that's what he's paid for. So, as I say, it's something I did. I'm very happy with that investment, but it's not something I would suggest other people get involved with, unless, of course, they want to. I mention this because he's just launched a mining operation. The minimum here was $25,000. It's gone down to $1,250. Because I believe it's dollars. It could be euros. The return projected in a year is 60%. Now this is a lot more stable, but there's still a risk. You don't want to go into this kind of thing. Things could go wrong. I guess the mining share could be flooded or something. That there's always risk in these things. I'm going into it, but whether you want to is something that is up to you. Anyway, just a quick point on that. There's a link in the email, or feel free to send me an email. There's a link in the email that comes with this report. And if you didn't get the email, just send me an email to john@bigcall.co.uk if it's of any interest to you. Right, looking at Wall Street, we've now got a low of sorts, and it's quite an interesting low. Quite an interesting low in the sense that from the peak here, we now have an A, B, C down to there. We then have 5 waves up, suggesting the low's in. We also got 5 waves down, which is a little bit strange down to there, and a very solid reaction at this point here. One of the things I've been doing recently is following Kyle Brown's options strategy on US stocks. He posted the various suggestions. He had a top 10 picks, and he was posted in the WhatsApp room, both the private room and the general room. And of all those ones, I think 80% have doubled in price over this decline. His timing was actually brilliant. He issued the top 10 tips around the peak. And it's been a great education in using options in this way. I haven't used US options before. I made a very solid 4-figure gain. I'm very happy with that. So I've been learning and earning at the same time, as have other people in the rooms. And we're soon going to launch a product. So if this is something that interests you, you get not just the recommendations, but Carl's very happy to coach you in his live room using his options. And of course, options are very suitable for people with lower sums to invest, because when you buy an option, you can choose an option that meets your own circumstances. And that's one of the ways that I'm planning to profit from these declines, and I believe this is just the first leg down. Having said that, we have got this A, B, and C, and of course that's a corrective form. Now the fact we've got 2 5-wave rallies is one 5 waves up, 1 5 waves down, does raise a few questions. So let's have a look at this in a bit more detail. I guess one possibility is that this is a failure, or a 5th wave failure. Unlikely to an extent, because this is a truly impulsive move. You think that wouldn't happen. Having said that, there was a real freak out here, as it were. Maybe it just went too far and this couldn't quite match it. We'll have to see what comes next. I mean, this looks positive, but it could just get blown away next week. You have options expiry coming up, of course. This is an important market event. Next week is options expiry. After that, you can get the fast action. So maybe we're just pausing. Maybe this is just one of five. That's one possibility. So maybe we're going to get some kind of fairly weak rally next week. I'm not sure. What I'm fairly sure about, I'd say 90%, is that this is the beginning of something much bigger that we're going to suffer for the next, I would think 2 or 3 years. I think this is probably the worst crash I'm going to experience in my lifetime. I cannot say worst. I'm hoping it'll be an excellent opportunity. But for those people not prepared for it, which of course is the majority, who listen to TV, CNBC, all that kind of stuff, talking heads just saying buy, 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 don't actually understand the mechanics of the market, whereby it drags everybody in on the upside, so everything looks fantastic, and then plunges down the downside until there's blood on the streets, fear everywhere, and that happens again and again and again. It seems to me we've seen such a massive peak now with everybody getting dragged in, that there's going to have to be a substantially bigger decline. So I'm expecting something quite horrendous, which is why the key point for this year, and in fact the next 3 years, is capital preservation. You want to make sure, as far as possible, that you're out of risky investments. I include property in that. Sadly, I mean, property is based on finance. It's all about ready cash, ready mortgage finance. So when that dries up, I believe it will, then there's going to be a lot of forced selling, and the property market will be decimated, I think. So it might be exaggeration, but I think we're going to see a severe property collapse. So again, you don't want to be overexposed. Nothing. Obviously, property is a great thing. I'm planning to keep my place in Spain. It's wonderful owning your own house. It's just a question of your capital allocation. You don't want to be exposed. You don't have such a big mortgage that if something goes wrong, you can't afford to pay it. You don't want to be in a situation where you might end up being a forced seller, and that is a big risk. Similarly, you want some spread. You want other assets around, especially gold and cryptos, in my opinion. Again, I can see what I'm doing. I cannot see into the future, obviously. Right, I strongly recommend you listening to this video on YouTube. You Google Alessio Rastani, the link is actually here. You can pause this and just copy that. This is a ETF, ETN, it's some kind of conglomerate investments, I think a Swiss conglomerate or whatever is running this. XIV, Velocity Shares, Daily Universe, VIX Short. It's just collapsed. I gather people me offered $4. This thing was $150, almost $140 before the volatility increased, and people are now being offered $4 or thereabouts to settle the whole thing, and that's what's take. Now, the VIX itself went up from about, I think, 10 or so up to about 30, 40. XIV is VIX backwards. This is a derivative, completely flawed in concept by the looks of it. I think the basic point was that suddenly this fund had to start selling VIX, or whatever it was, hugely, and there just wasn't enough supply, so the price just plummet. Now I think we're talking about a lot of money here. It's in the video. I mean, 400 billion, perhaps the whole valuation of Bitcoin at the moment. We're warned about Bitcoin as being some kind of scam, but nobody worries about, well, I worry about the derivatives, because as people said in the past, I think Warren Buffett among them, this is just a huge bomb just waiting to explode, because of course the knock-on effect. It's one thing to have one relatively small fund being virtually eliminated in a couple of days, and the financial geniuses that constructed this thing should hang their heads in shame, as should the buyers, really, for not investigating this. I mean, these people should be fairly sophisticated investors, and to get into something like this for this sort of result. But it's not the only one. There's a number I've seen where ETFs, etc., are backing bonds or whatever, and the bonds are illiquid. So when there is a run, and there's always a run, at some point in time, that's the way the market mechanism works, drags people on the upside, throws them out on the downside, they just collapse to nothing, and it's very frightening. I mean, compared to these, Bitcoin is gilt-edged, I think, because it has got an underlying purpose, which I'll be explaining in a book I'm writing at the moment. Anyway, the point I'm making is that there's a lot of these around. People have to start selling stuff to pay for the losses on this, and and it's it's all part and parcel of why I expect this to be the biggest crash of my lifetime. But do watch the video. There'll be a link in the email, or just email me for it. Right, the DAX, we saw the peak around 13.6. 1, 2, 3, 4, 5. No messing around here. Very clear 5-wave decline. We're now looking for an ABC rally. We probably want to go short. So look at the Fibonacci levels. Right, these are approximate. The 50% is approximately 12.8. The Fib 61.8 is around 13,000. 38.2 is actually neatly matched up with resistance here. As a wave 2, it normally goes on longer than you expect. In the Dow, having seen a possible ABC decline, it could make new highs, but the DAX is pretty clear here. Maybe A wave testing this level here, perhaps breaking above slightly, just to fool everybody. B wave, and then a final C we're up to 13,000. That would fit quite nicely, I think. So that's one scenario, but obviously we want to be going short into this. Maybe using options. We're looking at various possibilities in my private trading room. Obviously, issuing a big call when we see something that gives us an indication the peak may be. Right, FTSE, the 1 hour chart. That's how we can count this. Right, so we got this could be a 1 wave. In fact, there's a little blip here. 1, 2, 3, 4, 5. It could be a 2 wave, obviously, and a very big 3rd wave. A very solid spike. A, B, C, with now a 1, 2, 3, 4, 5. So it's quite likely we're going to see a gap open on Monday. The fibs again. Again, approximate 50% around here. Fall was 720 points thereabouts. Fibonacci 61.8% there, 38.2 around here. So again, same kind of pattern really, maybe an A wave to take out this peak here, B wave, maybe a rally there. I mean, that's purely hypothetical, but that's what idealized pattern. You can guarantee it won't be exactly like that. Time frame, let's see, we started this peak around the 15th. So currently we've had 1, 2, 3, 4 weeks. So a couple more weeks. So it should extend beyond expiry. But because you can see subnormal moves here, we can, of course, might expect other derivative stuff to come out. Just can't tell. In 87, the wave to rally was actually quite prolonged. It actually lasted longer than the decline. But anything's possible. You have to keep your wits about you, obviously. Well, the correction in gold, we've seen this A, B, now 1, 2. Got a possible 5-wave decline there, a bit messy, but possible. This could be a 4th wave. There could be one more decline needed. The obvious support level is 1300, so a break below that would be a typical way of the market to end the correction. Let's have a look at this in a little more detail. Well, we still got a nice low at 1308. Did buy some there. I mean, again, we've got a rather messy 5 here. 1, 2, 3. 4, but overlapping, which shouldn't happen, and then sort of ABC type 5th, not the stuff of dreams. Got another sort of ABC down here, similar form really. It all looks a bit corrective at the moment. Could be we've got one more leg up, in fact, as a correction, and then a final move down. But I think, especially if we're going to see equity markets rally next week, then gold could easily sort of go down a little bit further. I'm not convinced by this at the moment. It doesn't look terribly substantial. But I think, my view is that gold will see a major bottom in the next few weeks, and that could be a great buying opportunity for what I expect to be a very strong bull market this year. All right, finally look at the cryptos. I just have Ethereum today. Similarly, we saw a low around 5.6 on Ethereum, now up to 9.20. So it's not actually too far away from doubling from that level, not about 80% up, I think, probably. I think this is a 1 wave, ABC 2 wave, nice and clear. Looks like a 1, 2, 3, A, maybe a B, C. Goes below here, that would be raise a few question marks. Could easily do that, in fact. Then a 5th, perhaps. It's looking good. We could easily see another sell-off, but at the moment it's looking good. And there are question marks about this wave pattern, for example. not 100% clear. This is pretty clear, but this hasn't really done enough because the wave 1 peak is rather close to any kind of C wave coming in. See how it develops, but right now it looks good. We're going to see pullbacks, test this fledgling bull market. Actually, we'll look at Bitcoin quick. Right, on the way down, my target area for the low was 8,275. We did actually bounce, which is not on the chart, but so I was buying in that area. Once that broke, I started putting buy orders around here. Putting one there and a couple lower down. So most of that was filled, still got some cash within, but I got most of it into the market. Similar count here. I mean, we can count this fact as a 1, 2, 1, 2. So again, looking good. I mean, there are corrective counts here. It's not 100% clear. I mean, it could be, for example, you could count this as an A to there, B, then A, B, C, C. Not ideally. You expect the C to be a 5-wave form. Let's have a look at this decline quickly. So right now, in just the last few hours, it's in a peak there and a 1, 2, 3, 4, 5. So that suggests this is the beginning of a bigger move. How far it goes remains to be seen, but ABC would be ideal right now. But maybe we've got a bit more of a test to come. We'll see how it develops next week, which we'll be discussing in the WhatsApp room, etc. Right, that's all for today. If I found it interesting, useful, sorry a bit longer than usual, but quite a lot to talk about. And clearly we're at a critical stage in the market action, which could affect us all going forwards. Have a great weekend. Thanks for listening, and bye for now.